industrial sector has been the best performing sector on the JSE since the crisis of 2008. Well, that's not anything new to you, but what might be is the way that the Sanlam Investment SIM Industrial Fund has been performing. Andrew Kingston, portfolio manager of the SIM Industrial Fund, joins us from the Sanlam offices in Cape Town. I was quite astonished, Andrew, looking through the performance figures to see that you've posted 27% a year with dividends reinvested over the last 5 years. Now, you know as well as anybody else that that kind of a record cannot be sustained indefinitely. Are you starting to get nervous?
The return that's been generated must be seen in the context of interest rates that came down quite dramatically over that period. Also, there were a lot of international shares which expanded into new markets, and there was just a general broad re-rating of industrial shares. It does concern us. Obviously, the industrial shares have been the best performing area of the market, as you say, for the last 5 years. But you need to contextualize the performance of those shares where resource shares have been particularly weak post the sell down in the commodity cycle in 2008, 2009, and the structural issues around the financial area of the market post Lehman's and the banking crisis globally. So yes, industrial shares have performed very well, but in the context of 2 other areas of the market that have had their own specific issues.
Andrew, looking through your portfolio as at the end of June, that's the last numbers that I've got, you had nearly 40% of your investments in just 4 shares. Naspers, SAB Miller, British American Tobacco and Richemont. Now, they've been fantastic performers, all 4 of those, but isn't that a little overexposure?
You need to see the industrial index in its context. So it's a very concentrated area of the market. If you look at the index, the J257 as an example, the top 4 shares make up over 50% of the index. So while we don't profess to be index trackers, we do take notice of the index, and it does influence our weightings in the portfolio. The nature of these large shares are such that they are really large in the context of some medium to small companies on the local bourse, the likes of the food manufacturers, food retailers. And while those businesses are reasonable of size, they're obviously not significant when compared to the likes of a big global company like Richemont, British American Tobacco, Naspers, MTN, South African breweries.
Before we move on to them, because I'd love to get your insights into Kevin Hedderwick's company, the man we've just spoken to a moment ago, Famous Brands, but to have more than 1 in every 8 rands in your portfolio invested in a single stock in Naspers, I guess you're watching Koos Becker's health very carefully.
So Naspers has been one of the shares where we have an over-index weight, and we have a high degree of confidence in Koos Becker to deliver. I mean, so far it's been an exceptional performance of the last 3 years, particularly Tencent's performance, but there's also been increased traction on the classified internet site. So if you go back a year or 2, the value attributable to the internet assets outside Tencent and Mail.ru was fairly small, and today probably a little bit more significant. We see a lot of opportunity for that in the future, and I think that's one area where the market perhaps hasn't got the head around it properly.
So it's a special situation, one that you're riding that Bronco for all it's worth. SAB Miller is interesting though. That is a global company, it's very well known around the world, and yet its rating just seems to get higher and higher, despite moderate growth and growth projections. Isn't there a time, Andrew, that people are going to change their mind on this one?
Definitely, but I think you need to see SAB as what they've done over the last 10 years, really from a small South African base, really become a global player of size across a number of markets. SAB's benefited from the structural re-rating of a lot of consumer stocks internationally. So yes, we are a little bit concerned about the rating, but you need to see it in the context of much lower interest rates internationally. So there's a high level of persistency in SAB's business. Beer is a product which could be considered a staple product in some markets. Also, when you look at the rating of SAB in rands, there's also an impact with currency. So I think when you translate the earnings back, you'll see over time that the rating will come down quite significantly. So you need to see it in that context.
I've no doubt it was a staple in Durban on Saturday night. Not so sure about Cape Town though. But Andrew, reading through your commentary to the last quarter, it was interesting to see that you very much kind of buy and hold. No changes at all to the portfolio in the quarter to end of June. Have you been a little more active in the September quarter and thereafter?
If you go back previously, we were reasonably active, but the fund generally has a low level of turnover. We're generally quite confident in the portfolio. There hasn't been any dramatic change. If you look at the broad environment economically, there haven't been any major changes. Interest rates have been very benign. The macro environment has generally been supportive to more positive the last 6 months. So we haven't really felt a need to take major profits in any of our bets. We still see upside in quite a few of them. So the fund has been relatively inactive, but it just needs to be seen in light of the opportunities available as well. So there's been a general narrowing of returns in the market, so we don't really feel it necessary just to trade for the sake of it.
So you got your structure right. What about offshore? Do you have the capacity in your portfolio to take money abroad?
The fund can invest offshore, but we do feel our competency is really in the local market. So the fund has a small position in Berkshire Hathaway. The view is we'd rather leave it to the best manager. We like Warren Buffett and his philosophy. It's not a major bet in the fund, but it's just a bit of diversification. We think there's enough international exposure available in the local market if you look at all the global stocks. And even if you look at some of the local stocks, how they've internationalized their business, both in Africa and into new international markets.
But talking about foreigners, the investment from offshore into South African industrials has no doubt played a part in this re-rating we've seen.
No, that's true. I think if you look internationally 5 years ago, the global investors were generally underweight emerging markets, and particularly South Africa. So there's been a broad upweighting of emerging markets, and South Africa's obviously been a beneficiary of that as well. Some of that's cyclical and some of it's structural. I think the big underweight that the global investors found themselves in 5 years ago is probably narrowed, but in the context of as South Africa versus other emerging markets, South Africa recently has gone a little bit more out of favor. Obviously, the big current account deficit has played an issue there, and some concern on the currency side, and the sort of modest economic growth that South Africa is currently experiencing.
Thanks to Andrew Kingston. He's portfolio manager of the SIM Industrial Fund.